Good morning, everyone. I hope you're having a fantastic morning. And today we are about to go into the second session of Breakaway 3. I have the privilege of introducing Louise Wiggett, the founder and managing director of the Global Trade Solutions, or GTS, South Africa. And Louise is going to be chatting to you about exploring your borders. And most importantly, she's going to be giving you some really practical advice on how to navigate import and export tax implications. So I'm going to hand over to Louise. If you've got any questions for the end, please make sure you jot them down in the Q&A section, and we will keep some time at the end to answer those questions. Thank you.
Thank you very much, Chantal. I hope the audience can hear me, and welcome to everybody that's joining us. If I can maybe just get a confirmation that everybody can hear. Oh, I see lots of thumbs up here, and they're all in blue, so well done. If you can bring my presentation up, it will be very nice. Thank you very much. So today we've got the very challenging topic to talk about imports and exports and the logistical supply chain, and to prevent and manage VAT and custom duties pitfalls. I think anybody that has been operating in this environment will understand that it is quite a complex environment, and I'm hoping today that I can give you some nice tips and updates on how to navigate this session in a smooth and easy way. Thank you. Next slide. So if we look at, I'm going to start with the import process. And if we really look at the import transaction, it seems to be a very easy process where you've got a seller or manufacturer that is sitting overseas, and you've got a buyer that is sitting in South Africa, and you want to actually procure something from that person. But unfortunately, this process is not as simple as what it seems. So if we look at the next slide, you will see, and you can step through this immediacy, the bullets will come up. If you look at it just from a point of view of procuring the goods, you have to look at the costing implications and also your demand information. You're dealing with the customs authority on the outbound leg from the destination country, where you need to have a look at the tax implications. Very, very importantly is obviously the tariff classification, which is probably one of the most important aspects. Then also your valuation aspect, and what we commonly refer to as relief mechanisms or trade agreement benefits that you can obtain. So those are very, very important aspects that you've got to look at when you are importing. A lot of people actually don't realize that it is also important to look at how you go through your shipment process. So it's important to know and understand your logistical planning, shipping routes, again, your trade agreements that you want to use then. And then as you land in South Africa, you're again dealing with the customs authority, where you've got to ensure that you are compliant, and then actually taking the stuff into your stock and ensuring that the stock has been received accurately. Thank you very much. Next slide. So very importantly, from a customs planning consideration point of view, you need to make sure that the nature of your commercial transaction will result that the goods can actually be imported into South Africa. It's very important to consider things like terms of delivery, your Incoterms. Very often people only look at it from a financial point of view, and they don't look at it from an Incoterm point of view. And naturally, your Incoterms determine when your risk and liability passes over, but it also has an impact on your valuation point of view from a customs point of view. So it is very important that you look at that. You also need to have a look, depending on what harmonized tariff you've used, there will be a duty obligation that would arise from it. And unfortunately, this is not one of those areas where you can look at the harmonized tariff and then see that maybe the tariff code for, I'm going to use example for slippers, And it's quite an interesting point of view. If you look at slippers, and specifically baby slippers, if the slippers have got a specific thickness of sole, it will be classed as one type of slipper, and if it has got a different thickness of sole, it will be a different class of slipper. And those two slippers potentially could have different duty structures associated with them. Unfortunately, you can't unilaterally look at the duty and then decide to classify it. You need to look at the product and classify it correctly and then associate the relevant duties with it. So it's not the other way around, unfortunately. And I know a lot of buyers often have quite a big argument with you when you're sitting in the supply chain side, because they really want to say, no, but why can't we classify it on the lower duties? Also, you need to look if there's any additional services that will be performed that can have implications in terms of the customs clearance. So if there's any value add services that you perform in country, maybe adding tickets onto the goods or anything else that can impact your valuation rulings. And it is important that you also take these into consideration. Thank you. Next slide. If we then look at the supply chain side, it is really important, as I mentioned, on the costing point of view, that you make sure that you've got relevant and up-to-date information. My slipper example again, we had one of our retailers that decided very early on to import 1 million slippers. What happened is that the duty structure on the particular slippers changed, and it actually became unprofitable for them to import the slippers at the particular point, price point that they had considered. It's also very important that you look, isn't there better suppliers where you can source the products maybe from a different region or from a different area? Why is where you are in your shipment process important? Because the timing of the shipment impacts the value. The value determines the duties that you've got to pay. So all of these things play an important role. What is also important, as I mentioned before, is the relief measures that you can use. So in terms of origin determination, all of us that wear clothes, you can look at the inside of your clothes. There should be an indication of where the clothes originate from. And there's a whole set of rules that are important to take into consideration. And those origin determinations will then enable you to determine whether you can, in fact, in some instances, bring the product into South Africa duty-free. So I think those are the considerations on the supply chain side. Thank you very much. Also important is VAT considerations. Some of the aspects that I've already mentioned before. There's a whole string of documentary requirements that we've got to look at. You need to look whether you're the agent or the principal. You have to have a look whether you're bringing the stuff into a bond and are going to be removing it from bond. So all of these aspects, and again, to loop back to the time of supply and the value of supply is critically important when the VAT is determined on importation. Thank you very much. I'm now going to step off the import side because unfortunately we are not only being impacted with duties and taxes on the import side, but also on the export side. Now, I've used this slide for years and years because you can imagine that depending on how sophisticated your supply chain is, you might be sitting still here at the smoke signals and bongo drum situation. But we're hoping, if you look at the next slide, that we can move you away from the smoke signals and the bongo drums through the email thing to a fully digitized solution. And that's really where international trade is moving to now. Especially with COVID, it has accelerated the digitization of international trade extensively. But that has also made it more difficult to make sure that you actually comply with all the legislative requirements. So if we particularly look at the next slide from an export point of view, what is important, if one looks at the simplistic cargo flow, you know that the goods are flowing from the seller to the buyer. So if we look at the next slide then, thank you very much, we then will see, if you look at the next slide, please. We've got various documentation flows, and this is where the complexity on the export side also comes in, because there's a whole lot of documents that flows between different parties at different times, and from a customs and inspection point of view, they follow the cargo, and we need to make sure that the documentation is, number one, correct and is available at the particular point. So some kind of considerations I've put together on the next slide. Most importantly is, and I don't know how many people in the audience actually know it, but you can zero rate your export transactions if you comply with a whole lot of rules. I've added in that practice note number 2 from 1998, and that practice note, and the bigger part of it is still applicable to today. There has been some updates to the legislation, but what is critically important in order for you to zero rate your transaction is to understand your export transaction. So if we look at the next slide, so your challenges on the VAT compliance aspect is, firstly, you have to have all the correct documentation available. You actually have to make the decision up front whether you can zero rate the transaction. This is not something that can be done retrospectively. You do need to make sure that you comply with all the timelines and all the regulations and the rules. And you need to make sure that you actually are indicating it on your monthly or bi-monthly VAT return, which of the transactions are zero rated. SARS actually now reconcile that declaration on the VAT return with the export transactions. And if you want to get into serious trouble, those two figures won't balance. So it's actually critically important. It's not just a supply chain function, but it is also something that spills over into the tax department. Thank you very much. If we can look at the next slide. What is very important when you determine whether you can zero rate the export transaction is to actually determine whether it's a direct or an indirect export. If we can just go one back, thank you. So it's very important that you determine whether it's a direct or indirect export. And depending on whether you've determined that, you can then proceed and actually zero rate that transaction. Thank you very much. If we have a look at the next slide. Thank you. So the common pitfalls as far as the VAT zero rating is concerned is not all the documents are available and together. And that's probably one of the biggest challenges. If we remember the first slide that I showed you, how the documents flow and how many parties are involved in the document flow, you'll understand that the challenge to get all the relevant documentations together is quite big. But what adds to that is that those documents must be made and collected within certain timelines. So it's critical that you don't only realize that you've got to actually get the documents together, but there's very specific timelines with which you need to get the documents together. Also, the role that your freight and other forwarding parties play in this process is of critical importance. So you need to make sure that they understand and they adhere to the requirements. As I mentioned, also your transporter. Very, very important. One of the key tests that is done is whether you as the exporter are actually in control of the export transaction. So it's not merely just handing this whole responsibility over to either the freight forwarding and clearing agent or your transporter. You as the exporter need to be in control of both of those transactions. So for the freight forwarding agent, you need to give them a clearing instruction. And for the transporter, you must actually pay the transporter and have a contract with him. Time of supply issues is obviously also very important. Foreign registration liabilities, and then again we get back to our Incoterms, which is of critical importance because that will also guide us around the responsibilities and when the risk and rewards pass over. Thank you very much, and I hope that this has given you some insight into some of the pitfalls. I've put my contact details on if you want to contact us for some further information, and I'm open to any questions. Thank you.
Thank you, Louise. Appreciate that. Unfortunately, we don't have too much time for questions as the next session is starting shortly, but can I ask that you maybe hang around in the lounge at lunchtime so people can join you to ask questions? Would that be okay?
Absolutely no problem. I'll make sure that
Fantastic.
in the lounge. And as I said, my details are available if anybody wants to reach out. I was keeping an eye on the clock and was making sure that we're running on time. So thank you very much to everybody that joined online. This is obviously a new norm for us, but I think we managed to negate it through all the technical challenges. And very good luck to the rest of the speakers and to the participants to have an enjoyable event. Thank you very much. Goodbye.
Thank you, Louise.